In January 2005, we kicked off our enterprise-wide lean transformation, covering all facilities, and we went at it with a high level of vigor and energy. It became clear to us in finance that if we were going to support the operations and get on the leading edge of the lean transformation, we were going to have to learn more about what we in finance can do to support this. We did a little bit of research, came across the inaugural Lean Accounting Conference in Detroit that year. Our first step then was to select a model value stream that was fairly well along in their lean learning and their understanding of the principles and ready to really take advantage of value stream management, lean accounting. And the goal was to create a model for value stream management for our real value streams at one of our facilities, and at the same time concurrently determine what we need to change at the enterprise level in terms of accounting policies, practices and techniques, accounting systems, financial reporting and planning techniques that would support lean accounting value stream management. So a dual effort around what we need to do at a value stream and what we need to do at the enterprise, created in a model form that we can then use as the new standard to systematically deploy and continuously improve as we went forward. So as a result of that event, we ended up creating a value stream management system which essentially replaced what prior to that had been a form of control around, driven by our business system at the time, MRP2, which provided the operational control and generated a bunch of accounting entries that nobody understood. We were able to create a new set of metrics that were linked to the enterprise and business unit strategy, created a nice set of targets and a sense of the most important needles to move in that value stream. So we were focused on both what we call the box score, a holistic summary view of the operational indicators, the capacity indicators, and the financial indicators at that value stream level, with a cadence of the Plan, Do, Check, Act cadence that was built around a weekly system of standardized work. We created it so that the team themselves, with very little effort from the finance team, could populate their box score, including the financials, from sources that could give them the information as quickly and easily as they can get it. So they wouldn't have to wait for finance to come deliver their financial results to them. It wasn't long before anybody in that value stream would have been saying, we don't want to go back. It really is facilitating what we're trying to accomplish with our lean transformation. The enterprise side, we learned how to get rid of things in our financial statements that didn't make sense, how to determine what we can do to eliminate any allocations, any form of indirect costs hitting somebody's financial statements that weren't directly controlled by them. So this represented nirvana to us in terms of being able to help the organization make better decisions and understand the impact of their decisions on the financials in the context of the overall operational results. So it was really a much better place to be, and it didn't take a lot of push to get the finance folks to really jump on this. We were able to very quickly go to lean operational statements, very clear, plain English, no allocations, no overhead, no strange capitalizations, from the enterprise level all the way down to the value stream level. At the same time, eliminate all the reliance on standard costs, all the maintenance and waste that we were putting in each year, to update those standards, labor routings, overhead, volume assumptions, all of that did nothing but generate ongoing confusion, all the ongoing waste around that, and replace it with much simpler box score decision making.